a thinking in bets future where every decision is a trade, a hedge, etc., where the market is closer to a complete brain. So I mean, I don't know. This just seems very dystopian. That we're going to get to the point where everything is traded. For example, how many times is David going to drink from his coffee during the next podcast? Right?
Yes.
Welcome back to another episode of Token Narratives. I'm Graham Stone, joined by David Sencil of Bitcoin.com News, and we also are joined by friend of the pod, Pedro Garcia of DYOR Media Network. How you doing, Pedro?
Doing well. How you guys doing?
Doing good.
Great. Yeah, thanks for coming back, sir. Pedro is a chart guru, and so we're hoping to get some insights from him on the male astrology component of the markets here. Looking forward to that, Pedro. Let's get into our gut check, guys. So, bit of fear out there right now. Last Friday, a week ago, Bitcoin was up above 110K. Today, we're just barely above $100,000, and there's a lot of fear. People are saying that it seems that the consensus is that we will continue to drop lower. But Pedro, in a voice note to me earlier this week, you said that, that despite that being the consensus, you have a different view. You think that we might not be in for that much more pain here. Care to expand on that?
Yeah, absolutely. So I think there's been a few, before I really go into the detail of where price point where I'm really thinking the market's going to go down to, like, I think we'll see a bit of a sell-off still, but it isn't going to be in the idea of like a bear market like we've experienced in the past. Literally just simply because of what's happening with the US debt, what's actually happening with the US dollar and what we're seeing, and just this inflation environment that we're actually living in. We don't realize it because we are like a boat on a sea that goes up and down. So we don't really feel it. But ultimately, when we're looking at the market and the pain points of Bitcoin, to us, like right now, because we want to see a Bitcoin that just skyrockets, right? Like that's what we're used to right now. So ultimately, with looking at BTC, it's really important to understand that the environment that we're actually in is a dope environment, because those people who are invested in crypto, unfortunately, are going to be ahead based off of the narrative that the U.S. government is not going to stop spending money, and because of that, that's going to make us rich. And when we see sell-offs in Bitcoin, we will see institutions, because many institutions understand this narrative. And this is why we're still seeing, even though, a lot of companies are coming out with a ton of just bad news, like laying people off. We're seeing a recession starting to kick in now, right? It's kind of crazy in these circumstances. Yeah, we keep seeing housing go up. We keep seeing the stock market go up. We keep seeing, they call it the melt up. And many of the analysis, by looking at it, they only talk about the very short near term, but I've kind of taken a step back, much like Saylor has. And then I realized, and then this was the biggest aha moment, is when Saylor came out and when he came out and said, "This is what I'm doing. I know you guys don't really get it." And him basically stating, Bitcoin is going to become the settlement layer completely. And I am buying as much as I can so I can be a lender of last resort, basically. All of a sudden, I realized, go ahead.
Yeah, I was just going to So basically, your view is that money printer go burr, and Bitcoin is one of the best expressions of that, like monetary debasement trade, I guess you could call it. And so nothing to worry about here. Basically, that's what you're saying.
Yeah, and more importantly, to understand that as we start to see things really start to unfold in the economy at large, we will see everything basically get debased, right? Losing value. But as that happens, we're going to see the US government having to get bailed out. They will have to start doing quantitative easing again. They will have to step back into the Pringle can and pull out low rates. No matter what Powell says, he will have to do it because he will have to save the economy. The Fed is going to have to step in and help out. And because of that, that then is going to burr, as you say, and then create more stimulus or, more supply into the US dollar. Hence, what do we see when that happens? Monetary situation. We see just everything start to increase and inflation. And because of that, I think it's really important to understand is as we see the sell-offs in Bitcoin, and I'm going to start talking about the levels here, but I think what's important is this, is understanding that we're literally entering into a digitized financial world and that everything, a part of your life will be led in a way where you can actually monetize it, whether that's your sneakers, whether that is you go into a new place, you want to check it out, and you go on and you earn their stable coin, i.e. tokenization, whatever they're going to give you. And Bitcoin, as well as many of the other alts, will become a settlement layer that you can actually sit there and play with. And right now we're extremely, we're still at the beginning. As everybody knows, like 7% of the world just has some type of Bitcoin and they don't really even know what Bitcoin is, right?
I have some questions for you, sir.
Yes, sir.
You have spoken about Bitcoin, and I agree with you 100% on that. All of everything you said. What about alts? What about my meme coins and shit coins?
Oh, that is a great question. Yeah. Well,
how are they going to do?
I think some are going to go up, and we're going to see a great rally behind it, especially the ones with huge communities. I cannot see that is a trader's institutional's wet dream. When they see a huge community and they want to sit there and go, I now have liquidity to sell off when this thing is skyrocketing. I don't got to get press. I don't got to sit there and get all these people to rally behind this stock. They can sit there and say, we can push these memes all the way up to Valhalla, right? Sell off on all of their community, drop it back down 50, 70% and do it all over again. So if I'm a trader or I want to deploy, and let's say I've got, 4% or 3% that I've made off a great trade, and I can take, let's say, $4 or $5 billion. I'm a meme coin fund, literally, which we'll see, right, come out sooner or later within it. And you'll just start seeing funneling money and just doing this type of movement, I just got that gratefulness.
So we always get every, yeah, nice. It looks like a hula move. We always get this question every live stream episode. I'm sure you get this on your platform too. When alt season. And so let me just tell you the one that I think that I'm leaning towards is I think that alt seasons will happen. I think a proper alt season will happen if and only if we get like a parabolic move up in Bitcoin, right? If we get like kind of a blow off top in Bitcoin, I think it's pretty much guaranteed that an alt season will happen. But if we kind of grind up in Bitcoin, as we've seen for the past, 2 years, you're not going to really see this crazy kind of retail driven excess. And I'd like to hear your thoughts on that.
Yeah.
By the way, we do have a comment in the stream right now from Swartz Klein, and the question is, will there be an altcoin season?
Awesome. The guy's on point there, man. Things don't miss. He's swinging 1,000 right there. So yes, and I think ultimately to understand is this, and I think it's really important. Anything that we see that is potentially going to be a treasury, I think that's going to be something that we're gonna see a stability. Those alts, I believe, are definitely going to push up. Also, I think alts that have huge communities or have so much utility, like for example, everybody here knows that you guys know, that gaming is huge. Like we're talking $300 billion industry, right? It's ridiculous. And the reality is this, is there's so much money to be made from it by literally just opening it up and really doing it well on the blockchain. And in additionally to that, really see it progress with community, because I can launch a game and as let's say Cosmo, right? It's building, or Avalanche, right? And it's building stuff for games. All of a sudden I launch an amazing game and it just catches like wildfire, right? That is huge. You're talking huge money coming in that. And if I'm an institution, I'm sitting there going like, right now, this is at $2 billion, $3 billion. And the industry, once it works itself out, all of a sudden it goes from $2 to $3 billion, asset. And now you're funneling the whole entire gaming market into that blockchain or those type of blockchains. And then it changes the atmosphere. So you need to look at utility plus community. If you have big, huge communities along with great utility, you will see asset managers running to that and just throwing their money at it. Also, anything that could be collateralized and used as some form of debt obligation that has huge community will back that. So again, those altcoins like Crow, I look at Crow and I'm like, yeah, it's been a dud, right? But the reality is I don't think the Trump community will let that die. I don't see and anytime I see a sell off with, let's say, and I know this really burned a lot of crypto natives who got involved with World Liberty Coin. But the reality is I think I see it as, go ahead. Yes, sir.
Oh, no. Just, I got burned by World Liberty. So.
Got it. Yeah. I think it's any type of sell off, any type of things, you see things go down hard, right? And you see them searching for liquidity. That is them basically just saying to you, yeah, we're not done with this. We're trying to push this down so we can buy more of the supply. Because again, there's no law. There's really no rules still in crypto. It's still a discovery phase with YAR. There are starting to be some YAR duties on the playground, but there's no rules there right now, right? It's almost like, Jungle Ball, right? When you used to play when you were a kid, right? With football, right? Where everybody just tosses the ball and everybody gets hit. So I feel like that's the way it is. That's what we're seeing right now. And then when a kid gets an arm broken, right? You're like, okay, we can't do that now, right? I think that's where we're going. So when I look at alt season, I look at that as in I think we will have an alt season. I think DOT is going to explode. Like you said, Litecoin, a lot of the top 20, 30, I think absolutely, especially many of them have, like Sui, they have great utility. Plus they have huge communities. So that's just, like I said, it's juicy for any hedge fund manager looking at it going not only is it I have built-in liquidity, but I also have a utility that I can now generate income and see incredible alpha come from it by investing. And so, yes, it's coming. Will it look like what we are used to? Maybe not, because they are literally creating derivatives for those on the CME, right? That's the crazy thing when you look at the CME and we see a XRP future, we see a Solana future, we see an ETH future, right? Those are 25 times X leverage. And you can put in not a couple 100,000, even million, but you can throw in billions of dollars into these products. And they're perpetual, right? They're creating perpetual futures. So we will see in both rails. We will see big, huge, 20, 30 pushes, 40% in a year in these current small cap markets right now. But then we will see on the CME a 25, maybe 100x product that will correlate. And so just like they sit there and mess with the cash market on the S&P 500, we'll see, and then they push up they'll mess with the cash market to push up the futures market, which is a derivative market of it. I think that's what we'll see very much here. And so I don't think we'll see huge gains like we're used to. The usual 500, 600.
1000x, yeah.
Yeah, 1000x. But you will see a consistent 50, 60, 70%. In many of these coins until they get to a point where their market capitalization is just astronomical. Like when I look at Solana, I look at Solana as a great meme blockchain. And then I look at, let's say, potentially like Tesla. Okay. I know you're like, wow, they have no similarities. This is crazy talk. But the amount of money that it makes rivals with Tesla. And it's important to look, at least for me, when I look at the market, I'm like, which one is making money? Which one has the ability to make money? And then if I can sell off, buy in low again, and then push it back up and get 50, 60% annual growth over the next 20 years, 15 years, because right now we're still a nascent community, right? And so as we start to see it really build, and right now the railroads are being built, crosswords are being exchanged. You're seeing major institutions building their own blockchain. In addition to that, creating like JP Morgan has created a new, a tokenization creator. I don't know what we're going to call it, but I think that's what we're going to see back and forth. Go ahead. I want to get to an analogy.
Yeah, I was just gonna say. So it sounds to me like you think, which I haven't really considered before. You think that maybe the next alt season will be led by more traditional financial players as opposed to previous alt seasons, which have been basically, I think, retail driven kind of mania craziness. Is that kind of correct?
Yeah, absolutely. And the reason why I keep saying that is because every time we start to really see the FOD, the people who push the market up, the dumb money, right? It's the way to put it. Every time you start to see them really push in, you see the institutions selling off on them. So that's why, to me, and then once we come down at the low mark area, you see consolidating, and they're building their position again to push it back up. I mean, similar to when we saw Crow with World Liberty Financial. Whereas it looks like they were consolidating for about 2 years, right? Just kind of going sideways. And this is but I think we'll see that same type of movement, but we'll see boom, consolidate 3-6 months, boom. And we'll just see it's an algorithm where they basically go in and they're meeting orders. And I feel like this is going to be the setup. So as the US dollar starts to really kind of go down and lose its power, because we've now we've inflated it so much with so much monetary stimulus that the world and everybody else will sit there and say, where's world value? We can now have an equal amount of exchange. We actually have, like we talked about earlier, right? Genius Act. We talked about the Stablecoin Act, right? And how this is all set up. Well, America's literally exporting its debt to the rest of the world. So if I'm sitting there and I'm holding a, USDT, USDC, and I may be getting 4 or 5% interest rate. And if the USDF, I believe, or USDF or USDA is, I think it's like 12%, over 10% for staking. So whatever that is, if I would sit there and hold that, the only good thing for me holding a US treasury or stable coin is that now I can use it as an exchange to actually buy real assets. Much like, let's talk about the environment that we're in currently right now. And it's really important to understand where you can see how I'm looking at this circumstance. All right, imagine we're in a world, okay, which we are, and that is the financial world, okay? We have a sea, you have land, okay, and the land stays stagnant, okay? But the sea, tides come in, tides leave, right? And we see this. And we've experienced this with the US dollar for a long time. based off of what we've lived with after we've left the gold standard, right? When anytime there is a fiscal monetary push for money going into the system, right? We see the price of the US dollar just go down, right? Lower and lower. Basically, tide is leaving. It's basically coming out. But then we tighten and the price comes back in. Now, the reason why I'm saying this is understanding how supply and demand works with money going in and out of the system and its usage is really important. I'm not going to go into that because I want to keep this very simple. I just want to say, and the reason I'm saying this is because how I'm saying this is going to sound very basic, but it's really that basic. U.S. government's overspending. It's debasing its currency. And every time it's debasing its currency, mind you, assets or land stay stagnant. And as it's debasing it, what happens is you're seeing tide leaving. And so if I have this amount of money, and this is the land or this is the mountain, and I want to buy this land, I've got to spend more of the seed to get my assets. But as the asset or as the seed goes up, the US dollar goes up in value, you can buy more. This is really basic to understand. But the biggest thing to understand here is that as we print more money, we keep going down. And I don't think the US government's going to stop spending money. And so it has to figure out a way to get somebody to buy our debt. It's going to be through stable coins.
Stable coins, yeah. I would just point out though that there was a funny stat this week though. If you check the year-to-date returns on treasuries, USTs, US sovereign bonds versus Bitcoin, treasuries have a higher return year-to-date than Bitcoin does. So I mean, yeah. So I mean, as I've said many times, people will be familiar with this. The dollar is not good, but it's better than anything else in fiat land, and so. There's plenty of I think I agree with Arthur Hayes that there's plenty of people who are clamoring. And I've talked with a lot of people in Asia where I live that are clamoring for dollars versus their local currency. And so there's a lot of willing people who want to get out of their local currency, which is way worse than the dollar. And the dollar, of course, is, like you said, debasing. But in relative terms, it's debasing at a much lower rate than anything else.
Absolutely. I don't disagree with that. But ultimately, when you're dealing with people who want to get off of the USD and looking to either establish a Bitcoin currency or a gold currency, or a currency that is tied to gold now, this is the biggest issue that we're fighting and we're dealing with. And who's going to win out? Is it going to be the one with the biggest army? Or is it going to be the one who has a better AI? I mean, really, it really comes down to that.
Scary stuff. Maybe a mix of both.
Probably. I agree with you. I would agree with you. We'll see if America can pull ahead and get its... what's interesting? This is some conspiracy theory stuff. Where I live, there's a bunch of barbershops and stuff. And so I went in there and I ran into a guy who used to work at Google. And he was telling me, yeah, it was cool. We were BSing about, AI and all this stuff. And he basically said to me, he's like, I was like, what do you think about Neo, the new, 1X human, right?
Yeah. That was funny.
He goes, oh, we already had that. Like back in 2013, it actually went off the rails and killed a couple scientists.
What? Holy
it was
shit.
Get out of here, man. So he sent me the article and it's right. It's there.
Holy crap, that's crazy. That's crazy.
Yeah. But the funny thing behind it was I was like, did we create AI already? We just don't know about it yet. And they're just basically just spoon feeding us just to like get as much money as they can from them.
Yeah. There's some really awesome crypto theories I've heard about AI from crypto people that really I love a good conspiracy theory. There's the theory that AI is from the future, and it sent back it sent back the technology to create AI. Anyway, so yeah, there's a lot of good stuff around this. I wanted to ask you about the within altcoins, if you have any thoughts on like I would say one of the biggest prevailing narratives this year has been and this is probably shouldn't be a narrative anymore. It's probably getting to the point where it's just going to become kind of a part of how we price these things, but the revenue narrative, right? Coins that produce real revenue. And this is consensus, but I think this is going to these coins that produce real revenue consistently are going to be some of the strongest performers in any kind of alt season or going forward. Yeah.
No, I same sentiment. I mean, you're just parodying what I talked about earlier. I think also to understand, I think what's really important in this is that there's so many other new ways for the individual to receive also income in crypto, not just rewards, but staking. And then also not just staking, right? Then there's with Bitcoin, right? There's ordinals, right? And you have other avenues to receive a type of income, whereas only banks have that ability to do this, right? And I find that as we keep progressing and people keep becoming more creative, we're going to see more and more avenues for people to bring income in, even just based off of just meme coins. And so it's kind of dystopian in a sense that everything a part of your life, you're going to sit there and say, how do I digitize this? Right? How do I, really the real currency today is eyeballs, right? The more eyeballs you have, the more money you're going to make, right? And the more influence you have. I think what the biggest thing is whatever blockchain or anything that can bring assets to its holders, it's going to be the one that's going to succeed more than anything. Not just like a utility standpoint, but I mean, let's say like I can go through and create a D app on it where it's I'm able to tokenize my face because I've got a really big nose and people think it's funny. Now I've got eyeballs. Now I've got a tokenization of people. You know what I'm saying? So I think that's really kind of where we're going. And I know I call it dystopian because who wants to have to always think like that, right? But I think that's where we're headed. And like you said, that blockchain, that protocol, that business has to bring value now to its customers and clients more than just a product.
Yeah. I mean, there's on the blockchain side, this has been a topic this past week. I don't know if I'm going to jump ahead, Graham, here, but specifically about like Polymarket, which is kind of the darling of crypto at the moment, I think, other than like stable coins. But an application, it would be Polymarket. Apparently, everyone's talking about it. However, Polymarket's incredible rise in valuation and kind of, I would say, attention value has not helped what's it called? The Polygon chain. And the price of Polygon has not really benefited from this very much. And so there's questions, I think, from this goes into some of I think what's demoralizing a lot of developers, builders, and founders, which is part of the problem is that, okay, so Polymarket's going to benefit from this financialization, but maybe some of the underlying infrastructure isn't, and so it's not being spread out necessarily in the way that benefits everybody.
When you say benefits everybody, what do you mean by that?
All the projects that lie underneath that, as in like Polygon is really not getting much benefit from Polymarket's success, right? And part of that is going to be how the chain and the tokenization is designed, but part of it is just, I think, a realization that the fat protocol thesis was wrong, and that value is not going to accrue to basically the underlying protocols. It's going to accrue, like it did in Web 2, to the layer that has the the closest relationship with the users, i.e., Polymarket or Pump.Fund or things like that.
In the case of Polymarket, there's no token. It's private equity, so that's where all the value is going. And if you're out here slinging $100 bills on shitcoins, like you're not getting that upside.
You don't have access to that. Not only that, but I really think so. I've heard a lot of complaints on CT crypto Twitter this past week, basically more than a week, 2 weeks, 3 weeks, as the kind of cultural rise of Polymarket, where people are talking about it on like CNBC and all this kind of stuff. You're getting a lot of new users come in and try to get on Polymarket, and they're just getting on Twitter, not crypto Twitter, and then trying to onboard and just having a miserable experience. There's tons of these posts, and it's mostly related to, honestly, it's mostly related to Polygon. And so I think, here's a hot take. I think Polymarket is going to either spin off onto its own chain or move to multi-chain. Like I could see it landing on like Solana or something like that. Yeah. But probably it'll spin off into its own chain is what I'd imagine. Yeah, I'd imagine that's going to happen soon.
Shocking that it's still only on Polygon.
Yeah. Well, I want to throw a little wrench in that. In this idea that I agree with that, with the premise that you're saying, like the end user, who uses Polymarket, or not Polymarket, but who uses, Poly. Why am I forgetting? What is Poly? ADA, right?
Polygon.
Thank you. Sometimes my brain, like, you ever have those moments where you're just like, no, that's not it. And you're swiping through the thing in your head. You're like,
yeah,
no, that's not it.
Yeah, I was first thinking Matic. I was like, Matic, yes. Matic chain. No, it's Polygon.
Yeah. Matic. That's what, but they still have it as Matic. That's the thing, right?
Well, no, they moved over to the POL token.
POL now. Yeah. And they also have another chain, ZK, a ZK chain. So there's Polygon proof of stake chain, and then there's anyway. As usual, it's a hot steaming mess of like
crazy
what's going on.
Yeah, that's what I'm talking about, right? Like, so Polymarket Ascendant.
POL is down only.
Yeah. Polymarket Ascendant, talking about everywhere. Can I just go through some of these announcements? I guess we can switch to some of this.
Do it.
So this is this. I am known as the wet blanket, the old man, the curmudgeon of this podcast, and some of all the stuff this week about Polymarket has made me feel more dystopian. I feel worse, I guess. But let me go through some of this, right? So everybody's talking about prediction markets. A couple touch points that you had this week. You have the New York City mayoral election, right? And and Polymarket odds were clearly in favor of how do you say it?
Mamdani.
Pretty much for a long time, had him winning with an overwhelming percentage, like 90 plus for weeks and weeks and weeks. However, normal polls, even as soon as like 2 or 3 days before the actual election, said that other candidates were within 4% or 4 points of winning. So as in, it's like a reasonably close race. It's a race within reach. They were all wrong, and Polymarket was 100% right. So you have this further proof that Polymarket is just straight up better than these pollsters and these media organizations. So that's one touch point.
That also violates the narrative that the mainstream media is left leaning.
Right. Yeah.
Well, no, it violates the narrative that crypto is left leaning, right? Because this is
no.
The crypto favors the right?
More centralist to more libertarian.
It violates both those narratives.
You're right.
Yeah.
Sorry.
And then the media is more left leaning. But we all, I don't know how far we want to go down that route because we all lived through Sabesa sickness. We all, like I'm just,
Yeah.
everybody had to drink the, anyways, we'll leave it alone. But you saw how that was, how it was handled with the legacy media.
Yeah, absolutely. All right. So then this just overnight, or for me overnight, Google announced that they will start reporting polymarket odds. This is a kind of a big deal. I think a very big deal. So like on my Android phone, I can imagine soon in my Discover section at the very top, it'll be like, oh, by the way, here are the odds for whatever du jour topic is going on. And that's going to be integrated into smartphones and stuff soon. So I mean, it's a wild, huge boost to prediction markets where it's just going to be in everyone's face. All normal people are going to be seeing these odds all the time. Okay, so again, you have this kind of basically, I think, affirmation that prediction markets are really important. They're here. They're going to be embedded in our lives. Then I got this next tweet from somebody talking about how traditional financial players, it's specifically prop firms. So these kind of proprietary trading firms that they take their own capital and they trade it. They're getting into this. They see this as a huge opportunity. They're starting to fight for developers from Google, Amazon, Facebook, AI companies like OpenAI, because they want to get these developers and start financializing everything. And I'd just like to read the second tweet because it's just blowing my mind, right? This guy is talking about what TradFi prop firms are thinking about. The future they see is everything is traded. Take prediction markets to the limit and possibly crypto. Every aspect of life is financialized and traded. This is what these people are going for. And then there's a follow-up tweet. Google, Meta, Amazon, these are giant because they are like toll booths embedded in the loop of your thought or to action to thought chain. A thinking in bets future where every decision is a trade, a hedge, etc., where the market is closer to a complete brain. So I mean, I don't know. This just seems very dystopian. That we're going to get to the point where everything is traded. For example, how many times is David going to drink from his coffee during the next podcast? Right?
Yes, that will be. I will bet on it too.
Yeah, and it was interesting. Brian Armstrong in the Coinbase earnings call a few days ago. At the end of it, he said he just went and said,
"That's right,
BTC, ETH." He just like listed off a bunch of words. That,
he pulled up the prediction market and he just read off the
prediction market.
Yeah,
the market was like, will Brian Armstrong say these words? And then he just went ahead and said them.
Yeah.
So people were up in arms about that.
You're going to get these
arms about that on X.
You're going to get these like insane feedback loops, right? Like just think about the mind fuckery there, right? Like
you talk about AI recursive learning, bro. It's going to be recursive idiocracy and freaking.
Okay. To that point, Graham, let's talk about this last one. Talk here exactly to that point, Pedro. Recursive or like spiraling downward idiocracy / dystopian. You had DYOR markets. DYOR markets was announced this past week, and from what I understand, people can set up these markets for a DYOR that you have to live stream, and if you do the DYOR, then you get a payout, right? And this to me is just dark. You already kind of saw this with the Pump.Fund streamers, right?
Yeah.
What was they launched that streaming product where the streamer gets a bigger percentage of basically the money, the attention, compared to like Twitch. And I think the biggest account on that Pump.Fund streaming thing was a practical jokes account where these streamers would go up and do like practical jokes. They would live stream doing just dumb stuff, right? Like going around and screaming in people's faces or this kind of thing, asking people really rude questions and stuff like that. This dare markets thing just seems like the
next level,
the evolution of that. Yeah. And man, that's terrible. What a dark thing. You imagine like being a Zoomer and going on a date, and there's a dare market, like go on a date with somebody and throw the food in their face. Yeah. You just get these kind of like just kind of schizophrenic actions that people start like doing in real life because they're going to get a payout. It's just bizarre to me.
I think it has more to
be
do.
Entertaining though.
It's definitely be entertaining, but I think it has more to do with, and this is where I think it's the lack of purpose that we see in society, and the need for some form of validation for purpose. It's really interesting. There's another fad where Generation Alpha and Z are basically what do they call it? Where they just put their phone away for 15 minutes, 20 minutes, and they don't touch anything.
I saw that.
Yeah.
That made me feel sad too, by the way. like that's,
but,
are we going to have a...
Yeah. But here's the thing. I look at it like with the Charlie, I don't know if you're for Charlie Kirk or not. I appreciate what he was doing because he more holds my faith in what I believe. But in the reality was this, is that when he passed away, pour one for the homie, shout out. He literally raised up thousands, if not hundreds or tens of thousands of young men and women who decided they're going to go and just start to share their faith and do their best. And this is generation, Z here. This is that generation that is coming up, and they're cooked. But if you look at the transition, when we look at generations, that generation is set to be more of a conservative-based generation when you actually look at them. And when you look at the generations of how the cycles go, Generation Z and most likely Generation Alpha will be more conservative than we are. And
yeah, I agree.
Well,
but here,
I think we just
Go ahead.
I didn't mean to go there.
I was just going to say,
start talking about getting cooked. So sorry.
I want to bring it back to the question that everybody cares about, which is what will this new world mean for our bags?
There you go.
What does it mean for the price of Bitcoin and all the other coins in crypto, that this direction that we're moving?
I mean, there's an optimistic way to look at this, which we've touched on briefly before, Graham, which is pretty much everybody. Financial literacy is set to be just kind of like reading. You learn to read, obviously. Everyone learns to read, but everyone's going to be incredibly financially literate just by, I don't know, by elementary school. You're going to kind of know what yield is. You're going to know how to, these kinds of things that, at least when I grew up, nobody was really paying attention to. So that's an optimistic version, which means that I think it'll be good for assets. It'll be good, net positive for people's lives. You'll be able to borrow money and not get swindled. You'll be able to take more of any kind of yield or thing like that was basically held by these intermediaries. The negative side, though, is it can be very, very, very destabilizing, incredibly destabilizing. And so you can have, for example, what's an outcome of stable coins, which are going to be dollar denominated? What's an outcome of that becoming a insanely successful product 10 years from now? You have central banks around the world losing the ability to have control over the kind of the internals. Yeah, the internals of their country. That's probably not going to be very good for them, I think, right? You'll see a lot of instability maybe come out of that. So I don't know. I mean, mixed bag, really good for Bitcoin, I imagine, but I don't know.
That's where you're going. I think that's really where you're headed, because that idea, keep going. I'm saying preacher.
Well, but I get a lot of pushback because I think though, like, okay, so then let's say that Bitcoin goes to 1 million or 10 million or 20 million. Isn't that just like, most people then get priced out of getting Bitcoin, right? Most people in the world. And so then you're just moving capital from, I don't know, your Larry Finks or whatever to an even smaller number of people who have been lucky enough or smart enough or, whatever mix of that to have gotten it when it was cheap. But what happens to everybody else? Like, it seems a little unfair to me in that regard. It feels like then you have this kind of, you still have like a very big difference in terms of wealth distribution.
I'm not.
So yeah, I mean, I don't know. I'm just rambling here, I guess.
No, I think, okay, so I think there's going to be multiple layers here, right? So Bitcoin started off as an idea to be able to have a system. There was no real money when Bitcoin first started. There wasn't a liquidity pool. It was a group of people who decided to buy this thing and trade assets between each other, right? Like, it really was. It started off dark hole and it went weird. We saw it go into the Silk Road situation. And then from there, we started seeing it just slowly grow, right, into what we see today. If you get priced out, and it was that simple and easy to create, and now Bitcoin becomes, you're telling me that somebody else isn't going to come out and say, hey, we're going to create a new blockchain. We've been priced out of this. We're going to do this. And now, just like you had the silver and the gold, right now they're saying that Bitcoin and you have Ethereum, gold and silver. I don't think that's what's actually going to happen. I think ETH is going to become a utility system in which we build much like infrastructure and what we need to push out, in addition to many other blockchains. But then at the same time, I think we're also going to see people, let's say I come out the blockchain and I say, hey, you know what? I'm going to set this up where anybody who downloads this on their phone and actually starts to get it, we start trading with each other. I create a small little thing and I just make it decentralized. Put in a DAO system. Everybody sits there and brings consensus to it, and boom. If we get enough people, again, we'll see a similar situation again, right? But I think it allows people to be able to finally get in a system where you can write it up. And the beautiful part about decentralization is that you may put laws on it, but it's decentralized. And you can build an app, you can build a coin, you can launch it, you can do as much as you can. As long as I got that VPN, I'm good. So I think I don't think we're priced out. I think it's just finally opened up its ability to be able to sit there and monetize things that I normally could not monetize. Like me walking into a store, right, with Reeboks on. And I can sit there and create an app and push it out there and say, we're going to decentralize this. And every time you do that, you call it, like it's the gig economy, but it's actually, I mean, it's basically the gig economy, right? When we're talking about attention seekers, right? Through the DARE, we'll call it the DARE economy, right?
Do you think the gig economy has been net positive for people? Because I feel like that's in itself a little dystopian, the current gig economy.
Yes, but it's only dystopian literally because we started printing so much money on the debt that people couldn't get ahead. Whereas first they were able to get ahead, right? But the fact that we literally kicked off 40% of the the USD or during the Svesa sickness threw everything off. Prior to that, people were starting to do good, right? People would sit there and be able to get ahead, save an additional $400 or $500 by going out and working at night, and they were able to buy homes. People were able to get ahead, right? So I think it was. We just literally have to tell the U.S. government, stop printing, or figure out a way to circumvent the buddies over there who call the Fed that they're quasi-government, quasi-not, independent, how that all works. Nobody knows. We go around that circle always. But I don't think that was a bad thing until we really just started just taking away people's ability to make cash. And this is why I feel like we saw many other, whether right and left, really fighting hard to keep crypto outside of the U.S. economy. Because, again, you have the ability through decentralization, people gathering together, to be able to, oh, shoot, my light's turning. The 9, dude, we've already been on here since 9. It's been an hour.
You know,
About an hour, yeah.
I sound like a crazy guy. Sorry about it.
No, you don't. No, you don't. I sound
Bitcoin and crypto is it's kind of it's becoming very hated again. I feel like so? more so than, I mean, amongst it's loved amongst, it's more and more loved amongst, I don't know, like, the billionaire class or the Wall Street bros.
Yeah,
and more and more hated amongst the people who voted for Mamdani. And
yes,
that is
I would agree with that.
The growing element of society right now. So,
but also, Graham, who do you think is going to own the most Bitcoin in the future?
Exactly. That's why it's more and more hated by like the like riffraff of society. And the sad thing is, right, like, this whole thing was people got into crypto because they saw it as a lottery ticket, a way out, right? Like, of the, okay, like, this, finally, here's a financial system that I can buy into. And like, as a lot of people just got wrecked because of very many reasons, but ranging from whatever, like VCs dumping on them to like,
but
pump dump,
they're
pump
dumb
fund.
money.
Yeah, yeah, exactly. And it's not like the crypto ecosystem protects dumb money more than the TradFi system. In fact, it's the opposite. So people, the retail investor is just like jaded, and they're like, oh well, I might as well just if I'm going to put it into, if I have any money, I might as well just like put it into SQQQ or whatever, the NASDAQ ETF or something that's safer. Or better yet, Mag 7, or I don't know, like
sports betting,
DraftKings parlay for the real, like, that people see the odds of increasing their wealth there better than in crypto. And
well, yes and no, because here's the thing. Again, it all stems to what's going to happen with inflation, right? Like, if inflation keeps going the way it's going, I think it very much will. If we can figure out a way, because it's all about how do we get the middle class to finally get ahead again? That's the real question. Is it through crypto, which they thought it was? And I still think it is.
Yeah, I mean, I agree with you that that's the real question, how to get the middle class to do better. As Graham knows, though, and I've had many arguments with him and our CEO, Corbin, I think crypto actually probably does the opposite. I think it helps to fragment people, right? And at least like early crypto people, they're like, you often hear these words: crypto is my life raft. Crypto is my exit out of the system. This is fragmenting society. It's not bringing it together. You're not finding a solution to help society. You're like, oh well, this is all burning down. Here's how I get out. Right. So I don't know. I feel like it's the opposite.
What does that mean? Like, because I've heard the term, but you're almost using it outside of context in which it was used. So
really, I think I
don't think society. I think the rat race is what they were talking about, not the society in general. If anything, I feel like it brings people together. I never got together and talked with people about the U.S. dollar or how dope, Tesla was. But I'll get together and hang out with somebody and shoot the breeze and talk about all the altcoins and the ones where we're talking about, and we get together and we talk.
Yeah, I think for most people, I think crypto and Satoshi, I think, like, spelled this out in the Genesis block, which is crypto is kind of a reaction to a distrust in government. It's a reaction to a distrust in institutions, right? And thus it means it. I think that almost necessitates that then you don't believe that your government and your institutions can help you anymore. And that to me is like fragmenting. Whereas really, and I think here, okay, so I'm being pessimistic, but let me just skip to the optimistic part, which goes back to what you were saying.
No, generation, I like the pessimistic, because the pessimistic sets up for the optimism.
Yeah, generations, the Zoomers and the Alpha, they're going to be like you said, more conservative. And what that usually means is they're going to be more cohesive. They're going to come together more. Whereas before, the other generations were more atomizing. And I think that's what you kind of need to have like a successful middle class. I'm in Japan, right? It's got like, I think the highest middle class of a first world country in the world. It's like 85+%, 85+% middle class. Man, that, and you have a cohesive society, right? And I think that's what you need for that. And so there is optimism in terms of generations. So anyway, let me stop.
And I think also, so we got to look at Japan, right? So that they've been used for a carry trade, and they've been flush with money since, the late, early mid 90s to now, right? The carry trade is gone forever, right? So we know that. And so they've been flush with money for investment purposes. When you look at the cohesiveness of them, it's only literally because, one, they have a good economy, right? And people buy from them. Whereas we're more of an export economy, or we're more of a, not export economy. We are what is it?
Import. We import everything. Consumers.
We're consumer economy. And so we actually have to strive to get what we get. And when I say that's the wrong way of saying it, because the Japanese culture is very disciplined, very put together. But I mean, it's just a different society. America is, you need to, and we've always been this way. I can us to, when I met Corman the first time, I went up to him and I said to him, we were talking about trading and stuff like that. I didn't even know he was the CEO, right? And I basically said to him, I said, we have a different type of society. We have a fighting society that is very much like triggered, by fighting. And whereas a lot of the other places around aren't that way, I akin us to more of a, like, the 300 society. Like, it's, you got to fend for yourself, right? Apart from the people who, I hate to say it, that are on Social Security and other things, and God bless them, pray that they do well. But on the back end, though, the other percentages, pick up your bootstraps, get going. I did it myself. You need to do it. And that fractionalization that we're talking about, that you're leaning towards, comparative to Japan, is we are more of a let's go, let's get this going, and we fight through it as Americans. And I think that's really where we're fighting with, is what cultural system that we want to bring in to unite us together, versus the Japanese culture is based more off of just innately respect and that avenue for their culture. We're freedom of speech, and I'm not saying that they aren't, but there's, you disrespect your father, you disrespect the family, you're no longer a part of us, right? And that difference I think it's important, especially when you're talking about economy, because people knew they could trust through the carry trade that Japan was still going to work, because they've said they were going to do, and they don't mind being in that state of bad economy, but everybody still uses us, right? Like, if you look at the stock market, right? So I think it's really important to understand the nuances there, because if you just hold that to be what we're seeing, I think the real clutch that we need to pay attention to is the ability to, through a decentralized system, bringing people together, even though it's offshoots, like everybody wants to see crypto run. Just like what we saw with 100 years ago, when people really started pushing hard during the Industrial Revolution, that culture will come back in what we see in with Zoomers and with Generation Alpha. And I think agree. Crypto will be that catalyst to really bring them together.
Yeah, I mean, a lot of what we're talking about, I think it sounds like you might have read it too, but it's like from the Fourth Turning.
Yes. So that's exactly.
Yeah. So yeah. I mean, again, just to recap, like the U.S. wasn't always atomized, right? It follows a cycle, and before, like in the 50s, 30s, 40s, 50s, it was a very, very, very much of a kind of society first country, and then slowly over the ensuing decades, it became more and more independent, and we've kind of reached the kind of the height of that kind of independence, and you'll probably see this reset with Zoomers and Alpha. I hope. So yeah, I mean, I am overall optimistic. I think crypto will have a part to play, but it is something we have to work for. But here's for our listeners, just to bring it back to crypto. I think no matter which way it breaks, if it goes like to the worst possible timeline or the best possible timeline, in either one of those extremes, I think Bitcoin and crypto does well. So I don't,
Yep, that's exactly. Yeah, absolutely. Absolutely.
Yeah. So there's that. There's that.
So
Graham, do we have
buy more? Oh, sorry. Go ahead.
No, go ahead. Go ahead.
I was gonna say. So with that said, buy more assets. As in, remember we talked about the financial world and basically the U.S. dollar going down, being like housing, stocks, cryptos in that narrative. Buy more assets. Now, again, I'm not a financial advisor. Please do your own research. But look, it can't hurt. If you can buy a house right now in an inflationary society, you want to buy a house. You want to kind of accrue debt, unfortunately, right? Because your inflation is going to outrun your debt. And then you get on the US government side, what they're trying to do, right? And so play to the house.
Yeah. Graham, I mean, yes, absolutely. Do we have time to just briefly cover this DeFi thing for like what, 5 minutes, or should we wrap it up?
I thought that might be a good place to wrap it up.
Okay.
But
all right, that works.
Yeah. Yeah, Pedro, thank you for your contribution here. We got into quite a rabbit hole, I would say.
Totally off what I really wanted to.
That was awesome. That was great. Yeah, I loved it.
I wanted to go over the charts and show. I'd planned, like, I'd put all these, like, this is where I'm going to go. This is where this is, and I was literally going to, like, say, this is what we're going to see, right? Pull up, push back, percentage-wise jump, and it just didn't.
Let's do that. Let's do that. I want to see that because, you're the charts guy.
Yeah.
I want to know what you think. Are we going to be? Is this the bottom of the local bottom here, or do you think there's more pain? I mean, we talked broadly about like the thesis, right? Okay, long term, you just want to hold, obviously hard assets, and Bitcoin's a good expression of that. There's others in there. You mentioned real estate, whatever. But let's just look at the charts here. All right, what is the chart gods telling us?
Let me know when it's all right, so you guys can see it. All right.
Yeah, maybe you can zoom in a bit more.
Yeah, let me go ahead. So right now you have, I look at two charts, right? I look at the crypto chart, right? The spot coin. And then I also look at the CME and BTC. So it's really important to understand this.
Why?
I'll explain. BTC. See, that's why. Go and CME. Not it. See features. There we go. The reason why I look at this is the difference between what we're seeing right now on the spot coin versus what we're seeing with the actual, the future side, where real big money actually play, right? This is where institutions, and they've been playing here since 2017. So they've definitely got things set up in a way that they're ready for whatever, right? They've been buying BTC or Bitcoin for at least 7 to, dare I say, 10 years, right? Because for them to start up in 2017, I believe, is when they really released the CME. So that means they had to be buying spot coin for a while prior to that. So I say that because real simple. When you look at the market, this is leveraged. And on top of that, you can buy or hold in value 4 or 5 times the amount easily when it comes to the actual coin. And so this is 25 times leverage. In addition to it, you can actually receive real coin from the CME. They do settle in cash, right? And so this idea behind it is real simple. The 200 period moving average, which is sitting right here, we closed today, or a couple days ago. We tried to get above it. We couldn't. We're not seeing a big increase of volume coming on buys. And additionally to that, when you look at how far it can go down from a meta narrative perspective, it still can go all the way down to one being the 400 period moving average, sitting at the 88.35. This is the CME here. That's this level here, CME 400. You can see how I have it. Let me go ahead and make sure that you guys can see that well. So we're talking, we could see this drop easily another 13,000 points, right? If not further, coming back down to the lows of that 75,000. Now, this is not a bad thing, primarily because if it does go down there, there are shorts. That money that they're making off the short, they're going to put back into buying Bitcoin and other real spot currencies. So the reason why I point that out is because this is where the real money play, right? And then they buy the hard coin. And so they can't trade a lot of these other ones because, I mean, not to say that, I mean, they play with too big of money. That's just it, right? It's, it's like trying to fit, an elephant through like a door. It's just not going to work. So they have to create their own ecosystem. So this is where they play. So that's why you want to be paying attention to the CME BTC chart. In addition to that, when you look at now the spot coin BTC, spot coin right now we close above the 200 period, or we close below the 200 period moving average. The 200 period moving average, simple moving average, is a huge indication of a bearish sentiment. You close below it. We're already seeing the 50 period moving average on the CME chart. We are below it. We're below all the areas. So this is a critical point where we're sitting right now. If we close below and we start to sell off, the only level after this is literally that 88,000 to 92 or 92,000 to 88,000 area. After that, we're going down to that 75. So there's really like 3 spots that I can sit there and see. And again, each one of those spots are buy points for institutions because they want to scare the minnows. They want to scatter the flock, and so that they can get them to sell everything off and then pick it up. So hold on to your tokens or hold on to your coins and tokens and make sure that, as I said earlier, it has a big, big community. And 2, it has a form of liquidity or it has a form of payment system for themselves. And Bitcoin obviously has just the trust of a, financial product that holds, So we look at that. Now let's look at BTC crypto, Bitfinex. All right, Bitfinex. We already closed below the 200 period moving average on the actual in the spot market, right? We haven't tested it yet. But the fact is that we literally came down to my area, literally bounced off the 400 period moving average here. This is an important marker because if we go below the 400, you actually have the paper hands. They'll sell everything. There's just too many people who are sitting here. Where they're like, okay, there's that 100,000 mark area on the actual spot market. People are just going to give up the ghost and say, you know what? I have all this money in crypto, and I'm good, and I've got rising debt. In addition to that, inflation is killing me. So this is what's hurting them, right? So they're going to give it up. If that does happen, which I think that's what we'll see, and I think the government is going to do a nonchalant way of what the government made people do, give up their gold, right? But I think they're going to do it through inflation because they will have to. Right. And so I actually on my show, I told everybody, listen, go out and get 2 or 3 jobs if you can, like do your best and just literally put money into crypto so that you can start to stake it and receive some form of a reward, right? I don't want to call it yield because then that would be not really correct. But as we come down lower here, I'm expecting it once we start to see this break right here. The next level is literally at 87,000. After that, it's at 75,000. And that's a good thing.
Do you expect this to happen just in crypto markets or in all markets broadly? Like,
yeah,
do you expect?
But here's the
Go
thing.
ahead.
It's not, I was expecting, my view was because I didn't understand the way the dollar was being debased. And so I just assumed like 2000, 2008, right? In the 70s, the huge sell-offs where everything was based off of actual assets. And so it was propped up by the US dollar and the government. But now the thing that we're fighting against, right? Like we had a stability called the USDT. But now that's the thing that's at question. And that dictates everything in regards to asset world, right? And so that as the US dollar climbs up, we can actually buy more assets. As the dollar goes down, this affects us to be able to buy more assets. And so when you're looking at this chart and it starts to sell off, we're going to see everything in the global market also sell off. This is what's going to have to happen. That is a good thing. Buy the dip. Buy the dip. Again, I am not a financial advisor, but I'm letting you know we're not struggling with an actual asset issue. We're struggling now with the foundation that used to hold that asset.
All right. So Pedro, when you say buy the dip, you're suggesting around $80,000, around $80,000 Bitcoin?
100,000, 87,000, and potentially that 75,000 here. If it starts to pick up steam, it all depends. Also, this pickup steam will also depend on, honestly, if Powell keeps holding on to interest rates, right? And he refuses. People are already saying like he already made a comment this week, right? Like, that we're starting to have inflation issues again. We might have to hold the drop in the inflation. I think it's silly, no matter what. The fact that we're still going through. I actually like what Trump is doing with the actual stablecoin, but because of that circumstance and everything falling apart, we're already seeing jobs really get laid off. They keep trying to stimulate the economy with it. Lowering the interest rates, yields. But the problem is that's not the real issue. The issue is we don't have jobs. People don't have jobs. And the real jobs that you need to bring into America is everybody keeps talking about manufacturing jobs because it's a literally 269% multiplier of every dollar put into it. And Trump has already stepped in and just is holding that off. The fact is that during midterms, we saw around the whole entire United States, right? A blue wave. It's starting to tick up again, right? And so they are anti-crypto. And I hate to use the word, but you don't see them really trying to bring in real jobs. We see government jobs with them, but we don't see real manufacturing jobs. Trump had the ability. He kind of screwed the pooch. And so because of that, we're going to see a drop from that. Everything's going to slow down. And because he wasn't able to get those real jobs, and that's where the real economy is having issues at. People aren't buying stuff because they don't have money to buy it because it's getting eaten away from inflation. And then because of that, people aren't buying stuff. What happens? Companies have to lay people off. And then jobs go down. And it's that horrible circle until the government steps in. And what do? They stimulate. And stimulation doesn't really work much. You actually have to have a real economy boost. You actually have to have some form of real production. And I think that's going to come through AI as well as through robotics. And it's going to be a really topsy-turvy situation that correlates there. I don't think this is the final boss blow, right? Right now that we're saying, but I think that's where we're headed, especially when you look at the jobs and you keep seeing, this week we saw a huge portion of, what was the trucking company that laid off 600 truckers?
I didn't see this.
Yeah, we're seeing, transportation of goods and services slowed down, which is a huge indication that's saying, hey, knuckleheads, people are losing jobs and there's more jobs to be lost. And so we're going to see that. That's the real issue is U.S. debt, inflation, right? In conjunction with we don't have real jobs. And so when that happens, people are going to want to run to real assets. And i.e., before that happens, people will give up the ghost and we're going to see the stock market probably come back down again to that 6,500 area. Is really what I'm expecting it to come down to. I don't expect another huge sell-off. Maybe it might come down to the 6,200 area for the S&P 500, but it's not going to have a huge sell-off like I used to think that we were going to have when we're going to come back down to, 1,200 S&P 500, right? Like I was calling for that. And then I realized, wait, I misunderstand the whole entire narrative that's actually happening. The foundation itself is falling apart, not the actual assets themselves that are being built. And so I don't think we're going to have a huge sell-off because institutional money is going to put their money into assets because they understand the larger narrative, the bigger meta narrative that's at play here, right?
So you think Q4 is going to be rocky?
Yeah, Q4, Q1, especially when they start giving real numbers, right? We're going to see some struggling. But every sell-off, you're going to see people buy. In addition, the fact is that you barely saw look at gold. Gold is ridiculous, right? And if you guys trade, Pax-A-G, right? That thing went all the way up to 4,800, right? This is the gold chart. Gold dropped hardly think about it. It literally almost doubled itself. And it's maybe, what is it? It went to 440 and it sold off 10%. It's basically a correction, right? It's correcting 10%, finding support on the 50 period moving average. And look, the thing that's blowing me away is that yes, you would think at this moment, you should see bigger, we should be seeing this sizable selling going on. But over here, we're not. Why? Because everybody knows the underlying issue is the dollar and the U.S. debt. And if I am a real financial institute, right, and I'm going out there and I need to find real assets, I'm buying gold. And every time there's a sell-off, and you can see there again, if you look here on this 1 hour, they're buying. They're absolutely buying. Look at all these demand wicks. Demand wick. Demand wicks is where sellers step in and buyers buy it back. So the bottom wick is a demand wick. And so you're seeing, and this is what we're seeing here. They saw it sell off. Look at this giant demand wick. They're coming in. They're buying. They're building their position to push it back up again. It may come back down to that 38.44 area, but it's not going to go anything lower. That's a bottom price. And so the Federal Reserve, any major banking institution, large countries, China, Russia, half the Middle East, if anybody has extra money, they're trying to buy gold in addition to any form of assets they can hold. And you actually nail a point. Whereas large countries out there, but they're not doing well, they want to put their money into USDC, because they keep the inflation is so huge. And the reason why they're having such huge inflation is literally because the US dollar, because it's kind of correlated there, is getting jacked up. And so they're also seeing the deflation avenue behind it. There's a lot there. But ultimately, by me looking at this and watching gold is still just put in a higher low, and it's just consolidating here, right? I just don't see it. I don't see it going down much. And that's a huge indication of people don't trust, right? No, they don't trust the dollar, at least financial institutions. So they're putting their money into gold, which shows that, like what's actually happening with our economy. In addition to that, they're buying assets like the Mag 7, right? The Magnificent 7, because we know that tech is going to be a future forward-thinking thought. We know that. With the idea of humanoids, am I talking way too much? I feel like I sometimes...
No.
Okay. In this aspect of that, we're seeing humanoids, right? We know that in the next, I think, 10 years, I don't think everybody's saying in 3 to 5 years, we're going to have AGI. I don't think so. I just don't, right? It's still zeros and ones, and it's still through, and they keep talking about recursive learning, but the reality is it's like two mirrors looking at each other, right? And when you move it, it's like this, and it's basically still learning the wrong thing. It doesn't have logical recursive thinking, right? It's hard to actually balance that. and it takes way too much energy. And for us to actually be up and running at that point with the energy production of an AGI system, I think that's going to be 5 years from now at least. So with that said, that means in the next 5 to 10 years, we're going to see a big proportion push for robotics, right? And in that robotic system, or when I say robotics, I mean humanoids, right? As they go out and they start to take our work. Then at that moment in time, we will see price start to fluctuate. People lose jobs. People will unfortunately die. In that same sense, because a lot of people are going to be left out. America is going to lose its cup, of like the world leader fully. But I think with the onslaught of new technology like AI and humanoids, we will see a drop in the actual inflation, and we will actually go into a deflationary economy where you'll actually see people live a kind of utopian society by living in, within their world. I hate to say, in their, 8-block square that gets allotted to them. But you have all your needs met. And those are the people who will be, who don't have a skill set really to give. Right. But that's at least 5 to 10 years out. Could be very much 20 years. But this is where we're sitting right now. But short term, I expect as every sell-off that we see, expect it to push up. Right. And this is gold. We might see something like that, or we see something like this. This is gold right here. Boom. And then push up again. Because ultimately they don't know. They don't know. And they're gonna put their money into everything that they know. One, assets like Mag 7 because they're future forward tech. Two, crypto because it's future forward tech. That's honestly it in a nutshell. If America keeps going along what it's doing. I want to wrap that all up.
Yeah. Thanks, Pedro, for taking us through that. I think that might be a good place to wrap it up here today. Pedro, where can people find you?
Yeah, I do a daily talk show called DYOR Media Network. DYOR Media Network. You can find us on Rumble. We're on all the other social major, media platforms, but we're trying to grow on Rumble because I can say things there that I don't have to worry about getting in trouble. And as you can see, I like to talk about crazy things. So there's that place. And then I'm also on X at Pedro Garcia Jr. 79, I believe. You can find me there as well if you want to come find me and hear me ranting and yelling at people on X Spaces. So that's about it.
All right.
Okay,
thanks again, Pedro. No, we got you. Thanks again, Pedro. And thanks to everyone for listening. That's another episode of Token Narratives. See you next week.